Now, many traders change trading strategies every single week, but how do we actually know when it is the proper decision to abandon a particular trading strategy that you're trying to use because maybe it just does not work the way you thought it did? This is a really important and specific conversation that I think traders need to listen to, so make sure you hit the thumbs up button, subscribe if you're new, and stay to the very end. So let's say you started using a particular trading strategy and it's going well for a little bit, but then all of a sudden you start to hit a rut. You hit loss after loss and it just doesn't seem like the strategy is really performing like you thought it would. And how many of us have browsed through social media, finding videos on the best trading strategy only to be a little bit disappointed when we tried those systems ourselves? Well, in this video, I'll show you some practical tips to know a more appropriate way to scientific method this stuff and determine if it is actually a good decision to bail on a trading strategy that you've been exploring or to stick with it and work through the drawdowns that are part of the game. So a very first important step is that instead of taking a strategy off of YouTube and just loading up a live account or a prop firm account and starting to trade with it, take some time to truly backtest the system that you are looking to trade. What I would encourage you to do would be write down all of the different rules of your system or strategy and test these ideas out historically through a backtesting software. Before you start trading a strategy in the live market, it is very important that you do not skip this part of the process. Taking a strategy off of YouTube and just throwing it on a prop firm account or a live trading account is the equivalent of starting a business with no experience, no business plan, no capital, no nothing. You are just really gambling and hoping that something pays off big. Any good trader knows that preparing a system, testing it, understanding its flaws before you get into the market is critical to long-term trading success. Why? Because trading is volatile. There are inevitably going to be periods of times where whatever trading strategy you choose has some disappointing results. What I mean by that is no matter which strategy you choose, whether it be a pullback strategy, a breakout strategy, a fundamental analysis-based strategy, a sentiment analysis-based strategy, whatever type of strategy you use, no matter what you choose, it is going to have pros and it is going to have cons. For example, let's say you're trading with a simple Bollinger Band trading strategy. And let's just say with this strategy, you're basically taking shorts anytime it closes above and you're taking longs anytime it goes below. Just a simple example. This is going to work really well when the market is going sideways, but this same strategy is going to struggle when the market trends very aggressively in one singular direction. So logically, we may ask, how do you avoid that? And the actual answer is not so exciting. You can't. No matter what strategy you choose, it's going to struggle sometimes and it's going to perform excellently at other times. So instead of trying to hunt for the perfect trading strategy, we need to accept the flaws and understand the downside risks to the one that we've already got. So before we know if we can quit a trading strategy or if we should move on to another one, we need to thoroughly know well and have tested the one that we're using. If you haven't done that and you're thinking about quitting a trading strategy, I would say scrap everything, go to the starting board again and test your concepts thoroughly before you ever take them to the live market. Part 2 to this is really important. Most traders are able to find decent trading strategies and they don't even know it. They're just looking for something that doesn't exist, something that never has drawdowns, something that never loses and wins very, very frequently with great risk to reward. That is a myth, and it is a dangerous thing to spend all your time chasing that sort of strategy. Instead, go for something that has modest returns and that you can stick to that's comfortable to your trading style. Step number 2 is make sure that your position sizing is small enough to allow you to survive drawdowns without causing you to panic. And this is really important because we just got done talking about the mechanical side where you want to test your systems, make sure you understand what a normal drawdown range would be on your system, know what your win rate is, all that stuff before you get into the live markets. And by doing step 1, we have a general idea or a better idea of what a normal drawdown might look like within our trading strategy. Again, we've accepted that drawdowns are going to happen, but we need to know what a normal drawdown is. We get that from step 1. Step 2, however, is critical because it's one thing to backtest systems or to demo trade and not feel the effects of real money on the line. But once we get into the live markets and we start going through a drawdown, it can be psychologically difficult. And to better weather the storm and increase our probability of surviving drawdowns, Small position sizing is key to all trading strategies in my view. By having small enough size, we're not going to freak out when trades go against us, and we're going to increase our probability that a drawdown doesn't blow our account. Mathematically, by reducing your position size on the same trading strategy, you are guaranteed to improve your probability of not blowing up your account. This is why I often say in my videos, the fastest way to improve as a trader is to reduce your trade size. So again, step number 2 does 2 critical things. It helps us psychologically to better weather drawdowns and psychologically difficult times in our trading. But step 2 also dramatically helps with managing our risk and keeping drawdowns under control when we enter a losing streak. And you might be wondering, how do I know what the correct trade size for me is? And the answer is you should get that from step number 1. By understanding what a normal drawdown is through extensive back testing, you'll be able to figure out what right position sizing looks for you. Let's say that you really don't ever want to see your account go down 20% or more, and you've tested and you've found some instances where there was some steep drawdowns. If you risk too much, that 20% could have been 100% and your account would have blown, right? By studying your data through your back testing, you'll get a way better idea of what your proper position sizing looks like. Step number 3 is very important as well, except that nothing is perfect. And this right here, guys, is a secret in the trading space that nobody wants to hear, but also it is truly a secret of the trading industry. Great traders are not able to predict every type of move that the market's going to do next. Great traders accept mediocre, decent trading strategies that make more than they lose over the long term gradually, not quickly, not fast, not easy. They accept that a good trading strategy is simply something that over time yields more than it loses. Great trading strategies don't look like this. They look like this, right? They have peaks and valleys and overall grind higher. And if you feel you're ready with your trading to take it to the next level and scale it up, today's video sponsor might be a right fit for you. Today's video sponsor is DNA Funded. DNA Funded allows traders to get up to a 90% profit split on all of their trades. You can trade 800 plus different assets on their firm. They have unlimited trading days on their 1 and 2 phase challenges, allowing you to go at your own pace. And they have payouts in as low as 7 days. And for subscribers of my YouTube channel, right now they're doing a special discount with the promo code A1T20. A1T20 will get you 20% off any of their challenges. So check out DNA Funded down below in the description if you feel like your trading is ready to go for that next step in the prop firm funding route. Thanks for watching. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.